Today is going to be a two-part series. So I have Craig, who's joining me, who's a private money club member and has been doing quite a bit of lending. So he wants to talk. So Craig, I asked him to come on, and he was definitely willing, and thanks for coming on, Craig. But Craig is a lender on Private Money Club. Just wanted to kind of share his experience, what he does when he looks for deals and what he's done so far lending on different deals and what that's looked like. So we'll get Craig on. And then what I'm going to do is I'm just going to walk through some of the different deals that are available right now, some of the differences in them. And because I've had a lot of people reaching out lately that are lenders, like, hey, where do I start? Like, who do I talk to? Where do I find these deals? So I just wanted to go through some of those and kind of, and walk through, the best way to get started lending. So this is going to be all about lenders today. So it'll be really, really good. So Craig, thanks for being here. How are you?
I'm doing really great. Thanks for having me, and looking forward to sharing my experience. And I've been with the club for about 3 or 4 months. And as you said, I started off a little slow, just kind of previewing and getting to know folks, and then dove right in. So it's been a phenomenal experience so far.
Cool. Good. So tell me a little bit more, Craig. Like, what's your? Do you have a background in real estate? I think you originally found us through the Money Multiplier, and then ended up joining the Private Money Club too. Or what's that look like?
Yeah, so I've got a couple things going on. One, I'm an advisor in the IT space, so I do have a role where I work with large enterprise companies, kind of helping them solve some of their operational dilemmas, if you will. But for the last 12 years, I've been a consumer of the IBC process, the infinite banking concept, and recently joined the Money Multiplier. So I'm also a mentor there. About 2 years ago, got the license. I love sharing the privatized banking, and also when I found out the Private Money Club, I was really intrigued because I've been wanting to build this cash flow type of a model. And in the past, I've been doing some things with my privatized banking where doing more private equity type deals where, they're startup companies, some very intriguing businesses, but those are what I call the Hail Mary pass. You put some money in them, maybe, 5 years later, there could be some fruits there. So in addition to that, I wanted to get something going where there's not just the accumulation model or the Hail Mary passes, but actually getting deal flows and cash flow going through the system. And so the Private Money Club was perfect. I mean, I'm telling everybody I know about it. So.
Yeah, that's a good analogy. I mean, if you think about it, I'm a big sports guy, so I immediately started thinking about baseball. And you ever see the movie or read the book Moneyball? So Moneyball,
I have not.
The movie had Brad Pitt in it. The book is written by Michael Lewis, who's one of my favorite authors, actually. And, he wrote The Big Short and Liar's Poker, which was actually one of the books that I read that kind of pushed, kind of intrigued me into becoming a financial advisor back in the day. But just an awesome author. But he wrote the book Moneyball, which is all about, and now it became a big motion picture with Brad Pitt, but all about the Oakland Athletics and how they put together their team. And at the time, they really dug into statistics. And hey, if we start doing a lot of singles, stealing bases, getting runners on base, small baseball, what they call a small ball. Yep. And it's what they kind of refer to as Moneyball now, because by making all these little small things happen, it led to them winning championships on shoestring budgets. I mean, their budget, their payroll for their players was at one point, 1/100th of the Yankees or something like that. And they were beating them, just crazy numbers like that. But it's kind of funny he's saying that because, those people always get excited about the big deals and the big money. And, hey, I invested 100 grand and I made $1 million. But how many times you invest in $100,000 and you make zero and you lose money if, you don't hit that? It's just like gambling. You always hear about how people gamble and win. You never hear about their losses. Right. But anyways, so just when you're saying that, it kind of makes me think about, a lot of these deals, even though 10-12% is nothing to sneeze at, it's it's a good return, don't get me wrong, but it's not sexy, right? Hey, I get a 10% return annual coming in, monthly. It's not a whole lot of money, but it adds up over time. And really that's what success is all about. But anyway, sorry to distract.
And the other piece of it is what are some other things you can put your money into these days? And I've traditionally not been a big fan of the markets and 401ks and those types of things, just because one, I don't have the control of the money, and I'd rather pay the taxes now as opposed to pushing them off to later. But really when I'm looking at these opportunities I'm getting involved with, they're backed by a hard asset. So if say buy some stock in Coca-Cola and that, goes significantly down, I have nothing to really back that up. I have a piece of paper. So I like having the hard assets. I like putting money towards things that, if something doesn't work out, at least you've got some real estate there. So that's the other piece that's kind of driven me towards this path.
Yeah, definitely. So what he's talking about here, just to kind of draw this out so everybody's on the same page. Oh man, maybe they drawing all the 4th of July pictures. I think used all my ink up here. All right, so basically what we're talking about here, you got this nice little house right here, right, with a little reef on the door, got the chimney with the smoke coming out. Anyways, so let's say this is a house, right? So typically and let's say this is a stock. So this is like Coca-Cola. Is that what you said, Coca-Cola?
Right. Yeah, Coca-Cola, could be anything.
Right. So if I take my money right now and I invest in Coca-Cola and something drops in Coca-Cola or something happens with the company, basically my money drops with it. I don't have a lot of recourse, right? So what we do with private money lending, this is the basics behind private money lending right here. So what we do with this is this house right here, somebody comes in, they say, okay, I'm going to buy this house. It's worth $100,000. I'm going to buy it for $50,000. I'm going to put $10,000 into it, and then I'm going to sell it for $100,000, right? So to get to do that, you have to come up with $60,000, the purchase price, the rehab, and then whatever else goes into it. Let's just say you need a total of $70,000, right? So what you do is you need a total of $70,000 to purchase this home. So Craig here says, here's my options. I can invest in Coca-Cola, where if something happens with that business, my money's basically gone. I mean, I don't have a lot of recourse or anything like that. Or I can lend my money on this deal right here into this house. And the difference is this $70,000 right here. If something goes wrong in this deal, guess what Craig still has? He still has the house, because he's not just giving the money and saying, well, I think it's going to be based on this house. He's using 2 documents, one called a mortgage, right? A mortgage or a deed of trust, and something called a promissory note. And the promissory note's the contract with the terms, and the mortgage is the securing document that says if the terms are not met, you are able to foreclose on this house and take it over. So now my $70,000 that I'm giving to whoever that investor is now secured by this actual property, by this, and that's what he says, like hard asset. That's what he means by hard asset, is this actual home, this hard asset right here is protecting your investment, protecting your money. Because if something in that deal goes wrong, you have this instrument that says, I now am able to take over this property that's worth $100,000, that's securing my $70,000. So that's what we're talking about with this stuff right now, just to kind of draw that out a little bit.
Yeah, so it brings, I mean, I think that's hits the spot of where it brings me some comfort in doing some of these opportunities, because it's, not that you would want that to ever happen, but if it does, you do have some recourse. And, part of, you were mentioning before, there's the big hits, the big catches, you put 100 grand in, make $1 million, whatever it might be. But there's the Cashflow game by Robert Kiyosaki. And I don't know if anyone's played it. I used to play it with the kids, the Cashflow for kids.
Yeah.
The way you win the game is when your passive income exceeds your expenses. That's how you win the game. So we can all play this in real life if we can get this passive income machine working to where it not only exceeds your expenses, but it might provide you the lifestyle that you want. So that's the other piece of it that I really like about the Private Money Club.
Yeah. So passive income, the way that this is generated. So let's say Craig is 100,000. It's the wrong pen again. Let me throw this one away. All right. So let's say Craig has $100,000 that he wants to lend. All right. So let's just say you have that, Craig. And where are you currently lending from? Are you lending from policies, from IRAs? What are you doing?
So I have what I call 2 different types of warehouses. One is the privatized banking, the policies. The other is an all-in-one mortgage. And so what that allows me to do is tap into my equity. And the rate I have right now is 3.84%, but so I can pull money out of that. So I'm always looking at moving money between these policies, the all-in-one deals, right, doing some home improvements. So really I have two different types of warehouse, really the policies and the all-in-one.
So it could be a policy, it could be equity, like an all-in-one or a HELOC.
Yep.
It could be a self-directed IRA, retirement funds, could just be cash, right? Savings. Now, if you have money sitting in cash savings, you're kind of missing out on a little bit, per se, right? Because all of these different areas come with advantages. So a money multiplier policy is going to give you the advantage of lending your money and generating passive income, which we'll show in a second here. But the advantage of running it from a money multiplier policy is while the money's out creating passive income, it's also inside of the policy taking advantage of laws and rules that are on the books, something called uninterrupted compounding tax-free growth. So that's what's happening with the money inside the policy while you're simultaneously lending it out. So you're generating wealth in your family's life while you're creating passive income. So that's what the money multiplier policy allows you to do, as opposed to just cash is just giving you the passive income. Because when I lend to cash, I'm creating the passive income, but I'm not creating wealth growth because I'm giving it up. It's either or. The nice thing about infinite banking and what we do with the money multiplier is it's and. Caleb Gillum wrote a great book called The And Asset, but it talks about how we now have the wealth growth and the passive income. So we're taking advantage of that. Number two, equity. This is just tapping into free money right here. Because if you have a home that you bought 5, 6, 10 years ago for $200,000, let's say you owe $150,000 on it, but because of this market, it's now worth $300,000, $400,000. Let's just say you have $100,000 in equity in that home. Well, if you don't tap into that equity, what is that $100,000 in equity doing for you? Nothing. Essentially, it's a liability, right, on your books. But if we can tap into that equity through an all-in-one type deal, through a HELOC, through a refi, whatever, then we can take that $100,000 that otherwise was doing nothing for us, and now we can generate what you just said a minute ago, passive income. So we're taking advantage of free money right here and creating passive income. Here we're taking advantage of wealth creation. Here we're taking advantage of tax laws. So money in an IRA was tax deferred or tax-free growth. So we put the money inside this warehouse and then we lent it out and it's growing tax-free for us. So we're taking advantage of that. Again, cash is just cash. So yeah, it's generating passive income, but we're not taking advantage of other things as well. Nothing wrong with that. Just pointing out kind of where people are lending money from. So if you're a lender, where's your money right now? Where's it warehoused? Can we take the cash? Can we stick it into one of these vehicles to take advantage of it and then lend it out? Or does it make sense in our current situation just to lend it out directly to create income, passive income that way? And every situation is a little different, so we can strategize that. But right now, I just want you guys thinking, where is my money right now? Where can I tap into it? Do I have equity places? Do I have old 401ks that I can move over into a self-directed IRA, take control of it and do this strategy, okay? So just wanted to go through that. So right now you're using this one and this one, which is awesome.
Yeah, and one of the things, Stephen, that I'll sometimes do is I'll take money from the equity pile and put it into the policy, and then from the policy, then it goes into the private lending. So I like to make that stop into the policy before then it goes back out. So equity
to there.
Yep.
Right.
And then as I'm getting passive income, it may go back into, say, the all-in-one to make up for that, and it just keeps going in a circle.
Right.
So
no, I love it, man. It's great. And like you say, it just rotates it right through there. And so that goes into this part. So let's say you have $100,000 available from one of these needs, right? So then what we do is we're going to go into the private money club and then we're going to start looking for deals, right? So what's your process on that, Craig?
So a lot of it for me was just reaching out and talking to people. So when you had these Monday sessions, you would introduce people, whether Jack Petrick, Rob Fuller, others. I'd reach out and just talk to them, whether I had something at the time, and just learn about what they're doing, what types of things they're investing in. And since then, I've done some deals with Rob Fuller, Jack Petrick, some others, the mobile home parks. But what I'm doing is first talking to people, looking at the deals. What do I do from there? A lot of times I go to the county assessors and look at the house, look at the sales history, look at the tax history, look at some of the comps around there with, whether it's Zillow, so just kind of start poking around, seeing, what is the city that they're in? What goes on in that city? What kind of industry do they have? Why would somebody want to live there? What do the rents look like? So those are all the types of things I start doing as I'm kind of picking out deals. So I know that was a lot, but it just kind of starting to look at, the area, the real estate in that particular opportunity.
Yeah.
If you are renting, if you're doing a the BRRRR method, and they're going to have this as a rental, what are they getting for rents? Do we have the room there to do so?
Yeah, definitely. So just to kind of add into that a little bit, Craig, I'm glad that that's the process you're doing, because that's what I recommend. Just so you guys know, like, I didn't talk to Craig ahead of this or anything like that. He just basically emailed me, hey, what do you think? Like, like, if you want, I think it'd be cool to share my perspective on the lender side. I was like, that's a great idea. And this is, so we're just now on right now for the first time, but this wasn't planned, just so you guys know. So anyway, so I'm glad you said that, though, because that's exactly what I recommend to people. So when we talk, I always say the first thing you do when you go onto the private money club, when you're looking to lend money, is get familiar with who is borrowing money, because it could be the best deal in the world, but if you don't trust that person, or you don't know who you're giving your money to, the deal's irrelevant. Like, you got to understand who the person is, because it can be the best deal in the world, but if this person's a scumbag, then they can still F you over. And even though your money's protected, it still could be a bitch to get it back, right? I mean, you don't want to go through foreclosure. You don't want to have to get attorneys involved and courts involved and things like that. While you are protected for it, you don't want to go through that. Like, that's the worst case scenario, right? So anyways, so you always want to get to know the people. So like you were saying, these are a great way to do that on the private money club. Oh, where'd you go? Let me just share my screen real fast here. What happened? All right, I'm just going to share my screen just for everybody that's on here. Okay. So when you log into the private money club, basically, it shows you the deals and everything. But like I was saying, the people are more important, in my opinion. So first off, underneath, where is it? They supposedly added this back on here.
Are you looking for the connect where you can find others?
Well, the old, yeah, that too, but the old, okay, Money Club Mondays. So if you go to this resources, is that where I just was? Resources, you go to video training library. This is the list of all of the old Money Club Mondays that we did. So if you click on this, it's going to take you to a playlist, a YouTube playlist, and you can go through and start meeting some of these other investors. So obviously this was at Christmas time. I had my hat on, and we could probably do a better job of putting, who was on for each one of these, but you can click through these and see. So like, for instance, if you want to learn about Rob Fuller and what Rob Fuller's done, what Rob Fuller's doing, you click on this deal right here, and then you can watch the replay from the past episode where, Rob Fuller was on talking about the deals that he offered. So that's what you were saying, Craig, a minute ago.
Yep.
So this playlist right here has all the old episodes. So that way, because what I do is I bring on a lot of these borrowers, and that way you can get to know them. This is just initially when you're first starting to meet the people. And, a Zoom is a great way to kind of meet somebody, a little bit more intimate than a phone call. And, I don't bring these people on to like fluff them up. I bring them on because I want to learn who they are. I want to ask the hard questions. I want to say, hey, listen, like, if I'm investing my money with you, or if someone in my family is investing their money with you, like, are you really legit? And so I'm going to hit them with hard questions too. So what we do is we really pick these people apart on these webinars. So you can go back and watch those. And then what you want to do is you want to go and you want to start meeting people. So if you are looking at borrowers, you could say, find a borrower. And then you click this right here. And then this lists out everybody that when they created their profile, they chose, were they a lender, were they a borrower, or were they both? Well, if they clicked that they were a borrower or both, they're going to show up on this list right here. So this way you can say, okay, who are these borrowers? All right. So who's Levi? He looks like a nice family man. Let me click on Levi, and it tells you a little bit about him. So he's a private, he's seeking private money, currently averaging 3 to 5 deals a month. He's been in real estate for 7 years. He owns 28 doors. You learn a little bit about who Levi is. And if this looks good, you can say, okay, does Levi have any deals available? Do I want to talk to Levi? If I do, you can send him a message. Where's the message? Right towards the bottom. So you review this member. And if you've done business with them, you can write a review right there to let them know who they are. Or if you just want to message Levi, you can, add them to your contact list. You can send a private message, a public message. So it gives you different ways to contact him. And then right here, he made it real easy. You can even call or text him directly. So that way you guys can hop on a phone call, hop on a Zoom, and he tells you what he's looking for. So right now he's paying 15% interest between $10,000 and $50,000, or 12%, 50 to 100,000, or 10%. So he looks like he's willing to pay a little bit more for the smaller deals and the length of term. And if you want to chat, you just call Levi. So what I would do is I would, go on here and I would start going through these borrowers, and I would write them down in my notebook. Okay, this is Levi. I want to talk with him. Let me send him a message. Let's schedule a call. Okay, who's Brian? Who's Sean? Who's Dustin? Who's Nicholas? Who's Ron? Who's Paul? Have these people been on? Like Michael's been on the webinar before. Steve's been on the webinar before. And I would just click down through and I would start setting up phone calls and talking with them, and then keeping a nice notebook and logs of who you've talked to, rate them. What's their experience? Is this somebody I want to have future conversation? Even if you don't have money right now, even if you're like you don't have like money ready to lend right now, maybe you're 6 months out from when money's going to be available, or 3 months, I would still do this right away, because when you have your money available, you're going to want to lend that money out immediately. You don't want to say, okay, now I got $100,000 available. Now let me do my due diligence. Now let me underwrite the lender, or the borrowers. Now let me underwrite the deal. I want to do that ahead of time. So as soon as my money hits my bank account, it's going right back out the door. It's not sitting. Remember, money in motion is making more money. So we want to keep that going. What do you think about that, Craig?
I love it. Yeah, I mean, that's exactly what I've been doing. And just maybe a quick side story, because I think when we start talking to people, we have other ways of connecting to other people. And so I had mentioned earlier on, I do some private equity, and there's a company I work with. They put fiber optic services into new home developments. They've already got the trenches. So that's one of the companies I've invested in. I started thinking about, well, Rob Fuller, he's plugged into this side of the business. So I connected these two guys, and I'm like, you guys talk, because the guy doing the fiber optics and new developments can add value to what Rob Fuller and his group are doing. And it raises the price of the houses about 7%. So to me, it's just a matter of get to know people, connect people. It's just building these relationships, and you're already in a community of like-minded people. So just keep building on it.
Yeah, absolutely. And yeah, like you said, one thing, one opportunity leads to another opportunity, leads to somebody else, and a connection. So yeah, so start building those relationships right away, start taking good notes, because you never know when one person you talk to is going to lead into another, opportunity, and where that can lead to. And that's, people like Rob Fuller, people like Steve. I mean, those people have come to Private Money Club through relationships that we've had at masterminds, that through other business partners that we've met. Like Steve Lawson came from Steve Richards, who's in Indianapolis, who runs a big CEO mastermind and does a lot in that space. And so that's how he came to us. And then, one of our other members, Aaron, was like, hey, I've heard of Steve Lawson. Like, here's some stuff on him I've known him for like 10 years, and he sent this over. And it's like, it becomes a small little community, but that's what it's all about, is building those relationships. So that's what I would do first, is I would go through, and what we call this is there's basically three steps to a private money deal. So the people, the deal itself, and then the paperwork. So start in step one, start to get to know the people. And if you're a borrower on here right now, or you think you're going to be raising some money in the near future, let me know so we can bring you on Private Money Club. Right now it's free. There's no charge. In the future, we'll have like a fee for you to come on and be part of the webinar and stuff like that. But right now it's all free. So if you're a borrower on here, hop on and let's share. Who are you? What's your experience? If you have a perfect loan proposal. So that's step one. And then don't be scared to ask for referrals. Hey, have you worked with any other, people in the Private Money Club already? Or have you borrowed money from people in the past? Can I talk with them how their experience was? Or maybe you could just send them some testimonials. I mean, I know, Craig, you're more than happy to talk to people. Hey, here's my experience with Rob. Here's my experience with Jack. Jack Petrick does a great job also. And the second part of this, guys, just so you know, I'm going to talk a little bit more about deals, because that is the second part. So once you get to know the people, not only who they are, but what references, but what kinds of deals do they do? So what kinds of deals? Are they doing short-term deals? Are they doing long-term deals? Are they doing private funds? Are they doing one-offs? Do they have, a minimum where they only want to work with you if you have $100,000? I think Rob's Rob's minimum's 100,000, but Andrew's minimum in the new fund is 15,000. So if you only have 15,000 you're lending, then hey, Rob's a great guy to talk to and maybe, have a conversation with him for the future, but it's not who you're going to concentrate on right now because you're not going to be able to lend to him even if you wanted to, right? So what kinds of deals do they offer? And then, once we kind of have a list of the people we would consider lending to, then let's start looking at their deals. If they don't have any active deals right now, let's look at their past deals. Like what are ones that they just closed on that other people lent on? Because that gives you a good feel for what they'll have in the future a lot of times. Because most borrowers, most investors have a wheelhouse. Like right now, Jack Petrick in the past was multifamily apartment complexes. Right now, he's almost 100% in the new home developments here in Florida. Rob Fuller's is building developments from the bottom up. Steve Lawson does a lot of the smaller little flips. Dwight Harrison does seller finance lease option deals. Like they all have their little wheelhouses and that's what they're good at. So you get to kind of get a feel for what their deals are and what you want to lend on. And then it's underwriting the deal. So you mentioned, Craig, how you kind of start to do that. You said you hop on like county appraiser sites, right?
Yeah, the counter assessor, and it doesn't always work, but I like to get a little history of the property and tax history, sales history, and also I think it's just good to understand what is the market you're in, what's the population, what's the industry around there. Now I will tell you, I'm working on an opportunity right now where it's in an area that I wasn't real comfortable with. It's like, what's going on here? So I called the gentleman that's putting the deal together, and we just talked through. He's got a number of properties in that area. It's just he's very, very focused. He has a lot of knowledge in that area. So although it's something I wasn't necessarily comfortable with in terms of the community, it's not like there's big industry around there. He's got a machine working there. He knows how to make that work. He knows how to get these properties for cheap, put some money into them and get them rented. So, there's everything from the Rob Fuller deals, which are big developments. There's, to your point, the Jack Petrick, which does single lot developments. There's the mobile home. There's land with, Duck V, I think they call them. And so to me, it's just, there's a plethora of different things you can get into. And one of my concerns with coming into the group was, am I going to have to fight for deals? A deal comes up and there's not going to be enough. I can say there's more deals than I have money. I wish I had more I could throw around, but there's a lot of opportunity out there.
Yeah, absolutely. And I mean, right now, all the borrowers, the people especially you're mentioning right there, Craig, are all very experienced too. It's not like they're brand new investors and this is their first flip and, they're listening to what the guru taught them and they're hoping for the best. These are experienced operators that, this is their full-time gigs. This is what they've been doing for the last decade and they're very good at what they do.
Yeah, I would agree.
Which lending on the first time makes a big deal. So, all right, so that's your process a little bit. So have you lent on any so one thing with like Rob Fuller and Jack Petrick is they basically have set terms. Is that fair to say? And so I'll just give you guys an example of that. So these are more almost like funds, right? Even though Rob Fuller can be a little bit, so one of the things you'll see with you'll hear these names that we're talking about: Rob Fuller, Jack Petrick. We have Andrew, which I'll talk a little bit about. Andrew Chestnut. I'm trying to think in there of who else, but so these deals right here are kind of larger deals. And what I mean by that is they're going to say to you, 100,000 to 250 equals 12%, 250 to 500 is 15%, 500 plus is 16%, or whatever it is, right? I don't know exactly what it is, but they kind of have set figures. The paperwork, the contracts, the mortgage, the promissory note, it's already been done by attorneys. It's all approved. Like you're not changing anything on these deals. The fund right now, even that Andrew Chestnut has with Chris Naugle, it's very set terms, right? So
yeah, the other piece, Stephen, that I've noticed is that they don't always pay the same way either. So some of them will pay monthly, some will do, hey, I'm going to give you 6 months up front, or I'll pay 2 months up front. So depending on what you're trying to accomplish with your cash flowing, some of those deals might make sense too, because some of them pay every month for 12 months, some of them stack it all in the front. So I've noticed there's some different payment structures out there as well.
Yeah, quarterly interest
Yep.
only, monthly interest only. It's all done up front, half up front, half at
Yep.
the end. And there's different ways to structure these deals. Typically, when you're working with like some of these guys that have been around and are doing this over and over and over and over and over again very quickly with lots of investors, they're set. And the reason for that is because it's hard. Rob Fuller's funding, for example, Rob's deal is $10 million, this raise, right? So when you're raising $10 million, it's hard to have 20 different terms, meaning, one investor has quarterly, one investor has monthly payments, one investor has all at the end or whatever. So they're going to have, everybody's basically be the same terms. So that way, when when they're paying it out, it's just a set thing that happens each month and it goes in and goes out. And so it makes it very easy. Now, the difference in that and like somebody like Levi. So I'll just show you guys Levi, how to pull it up on the screen. So I'll just use him an example. The Levi or Steve Lawson or Dwight even, or a bunch of names on here. I could go through.
Michael Curse. Yeah.
But these are going to be more like one-off deals that I call. So one-off flips. So these are going to be your little houses. So like this is a whole development. These are ground up. They're purchasing the property, developing it. They're bringing in utilities. They're doing all the work. This is a fund that's purchasing millions and millions of dollars of commercial real estate. You could be, some of your money could go towards a shopping mall in Nevada, and another one could go towards a hospital in California. Another one could go whatever, right? There's deals all over in Texas. So your money could be going all over with the fund. With these little one-off flips, it's one house, one mortgage, one promissory note, and one lender most of the time, right? So you as the one lender lending on one deal with one set of paperwork, this is where you're able to negotiate a little bit more. What are the terms? Do you want points up front? Do you want monthly interest only? And then these are more of the conversation that you're having with these investors. How much, there's not a minimum per se, right? They're going to say like, on this deal, it's 100,000 minimum. On this deal, it's 50,000 minimum. On this deal, it's 15,000 minimum. On these deals, there's no minimums. So maybe they need $100,000, but you only have 50,000. So you find maybe we have two lenders that go in on this deal together, but you guys are making that happen together. Maybe the mortgage and the promissory note that are used, aren't necessarily, verified by these big time attorneys. And maybe that's something you need the attorneys to look at again and make sure it's done properly. So I just want to kind of lay out when it comes to the deals, those are the conversations you're going to be having with the borrowers, right? Like, is this something that we're negotiating? Is this something that just everybody goes into? What does that look like? Does that make sense to everybody? And if you guys have questions, put your questions in, please. But anything on that, Craig, you wanted to clarify or add on?
No, I think that's spot on. There was one of the folks I was dealing with had some money available. We were talking about an opportunity, and they had a set rate and a term, and it didn't work for me. So I asked for a change in the interest rate and less time. And we went back and forth, negotiate. He found someone else that fit what he needed better. But I would say there's no reason we can't negotiate what works for both parties. And if they find something better, you find something better, you roll with it. But I was looking for something a little bit higher interest rate, shorter term. He wanted lower interest rate, longer term. Didn't work on that particular deal, but I said, hey, let's look at the next one.
Right.
But yeah, I think it's definitely something just to have a conversation about. How do we both make this work for both parties?
Yeah, absolutely. And typically that's just a negotiation, just chatting. And like you said, create the win-win situation that fits what you want to do and fits what the investor is able to do with the deal. Because remember, an investor, a borrower that's doing a flip or doing a lease option or doing a long-term hold or doing a short-term Airbnb that they're going to, do the BRRRR method or something like that. Like, they have figures that they need to work within too. So if you're saying, well, I'm going to charge 15% to make this worth my time, but in their numbers, they can only pay 10%, then it's just not a good fit. but there's nothing wrong with that because like you said, there's always the next deal. It's not going to be, you know, one and done type situation. So those are some of the different ones and different things to look for right there. And then, you know, so once you figure out who the person is, once you identify the deal, and again, just to go on the deal a little bit more. So those are the different types of deals. And right now in the Private Money Club, there's everything from 3-month short-term flips to 7-year long-term deals in there that if you wanted to finance something long-term, you know, Dwight, I think even Steve right now is doing some longer term stuff, and those are amortized actually. So just like a bank, you're not only making, you know, outside of interest, like we were talking about before, Craig, with interest only monthly or quarterly, or, you know, the interest paid up front, these are actually amortized. So you're getting back some principal along with the interest along the way, which is kind of cool. So they're doing some of those. So there's everything out there under the sun. But those are the different types of deals. And then, you know, but regardless of what it is, the paperwork's always basically going to be the same. It's going to be a mortgage document and it's going to be that promissory note. And at the end of the day, that's what's protecting you and your money and gives you the rights as the investor. So you always want to make sure that that's done right. Remember, then the other little rules, like whenever you lend money, you're always only lending to companies. You never lend to an individual. Always get the paperwork signed before you wire any money. You know, you should be sending it to an attorney or, you know, an escrow company, a title company, something like that. So just those little things right there to be aware of as well.
I think there are a couple questions out there. One was about reinvesting, and the behavior I've seen in terms of reinvesting is, so say Jack Petrick has a deal, you put the money in, you get the house. Legally, they have to send the money back to you to close that deal out, but you can still reinvest by then wiring that money back. That's what I've been noticing, is that you can't just send your money into Jack and say, hey, let's do a deal, and then do another deal. The money always has to come home, check in, get sent back out, but it can be reinvested. Just has to be on a new deal. And you want to do that because you always want your money tied to that particular note. You don't want it just floating out there saying, let's just roll it into a new note.
Yeah.
So I don't know if you want to add anything to that, but that's one of the things that I also thought you could just send some money into them. They just keep it rolling, but it's got to come home and then get sent back out.
Yeah. So what Drew's talking about is what's called an open fund, essentially. And what that means is it's open-ended. So, you know, like for instance, Safari, if you guys remember Safari Fund, the current fund that Andrew has. So I'm just going to write Andrew on here. Has anybody, my handwriting is atrocious today. Is anybody already investing in the new cap fund with Andrew and Chris? Just if you're already investing, right, invest. If you're not yet, tell me, and I'm going to connect you guys with Andrew. I need to connect you a certain way though. So, so just let me know if you want to connect with Andrew in the chat box, and I'll write your name down and I'll make an introduction, but I'll show you guys right now what this is all about and what you're talking about right there, Craig. This will make sense. So these are kind of different kinds of funds. So Andrew right now has what's called the cap. I think this one's called cap. I don't know. Let's call it the cap fund. So an open fund basically means there's no limit on the amount of money that can be raised. So what that means with an open fund is it's always taking the money and investing. But the people down here that are investing, the amount of money that the fund can take in is basically unlimited. And then they can request their money out at any time as well. So there's basically not really terms. So they might be like, you know, they might have like a minimum, like you have to put in a minimum of 50,000. You have to keep your money in for at least 6 months. You'll be penalized or something like that. But essentially you can put money in and take money out at any time. And a lot of times there's an option in there with, instead of getting money out or getting interest payments monthly or quarterly, you can just reinvest the money. So instead of coming back to you, your money just stays in the fund, reinvesting and growing for you within the fund, and then you can pull it out at any time. The kind of funds that we typically work with, whether it's a Rob Fuller deal, whether it's a cap fund like Andrew has right now, some of these other ones, these are closed funds. So what that means is, let's say 10 million, and then it's capped. It's capped at 10 million. So it can't raise any more than 10. It can raise less, but it can't raise more so. And there's specific terms. So for example, in the new fund that Andrew has, let me just pull this up to make sure I have it right. So 12 months, is 6%. 18 months is 7.5. 24 is 9, and 36 is 10. Okay. And those are all interest or monthly interest only payments. So, so if you, for example, took $100,000 and you invested it at 10% for 3 years, what's that math? Like 8 something, like 830, is that right? So if I take 100, 1, 2, 3, times it by 0.10 and divide it by 12. So yeah, 833 a month. So if you were to do that right there, you know, so if I was to give Andrew $100,000 right now at 3 years for 10%, I know that I'm going to have $833 coming in every single month for the next 36 months. That's just what's going to happen. At the end of the 36 months, I'm going to get my $100,000 back. Okay. Or if you just, so what you do, if you look at something like this, that's a closed fund, and that's what's going to happen no matter what. So there's no option to take this and reinvest it into there because it's a closed fund. So that's the way it works. You can bring your money. Now, as the money comes back in, then you could take that money and, you know, reinvest it back in once it builds up, or put it into, like you're saying, another deal like that, or Craig, or something like that. But that's how this fund is here is going to work. So then when I talk to Andrew and I find out about it, this is a very conservative fund. So those of you that are doing lending right now and you're concerned about a market downturn, first off, and I'm not a partner in this fund, I have nothing to do with it, just to be clear here. So I'm just talking from experience with this stuff. But this fund right here is Andrew's a partner, Chris is a partner, and 2 other guys that have a lot of experience in this, been doing it for decades. They're very good at what they do. So what they're doing with this fund is it's very conservative. So they're lending on commercial real estate, but they're only lending 60% loan to value, which is conservative in a lending business. So what they're basically doing is they're saying, hey, we're expecting a market downturn, so we're only going to do deals that are killer deals right now. So if we do have a market downturn, there's still plenty of room in this deal for the market to come down where we'll still be profitable and we'll still be able to make money. And when you look at not only, and Andrew can give you guys the details on this, he can send you the PPM and the actual summary and everything like that. I just wanted to kind of go over the basics of this, because if anybody wants to learn more about this, I just need you to either message me right now or email me and let me connect you with the right person, and they can give you the details. Because in my opinion, this is a great, I hate the word safe, but in my opinion, safe investment right now if you're new to private money lending. Okay. Because it's a fund, it's just the way that it's done. It's a little bit different than, like, you remember those individual ones I was telling you about before, the one-offs. Those one-offs, you know, there's just one property. So it's one investor. If one thing goes wrong, then, hey, you could lose, you know, or maybe you have to take over the property. Maybe they have a hard time paying you back. Maybe that private investor doesn't have the means to pay back. Or something like this right now, when we're facing what we're facing coming up in the country, this thing is so conservative and so well diversified into multiple properties all over the place. And it's ran by very experienced operators, that if things start to go haywire in this country, odds are you're still going to be able to get paid and still get your money back, and still going to be safe and protected. And even if something goes completely wrong and we go into the worst depression, it's worse than 08 and all that stuff, something like this, your money's, maybe you don't get it back in 3 years. Maybe it takes 6 years to get your money back, but you will eventually get it back in most cases. So things like this, so just different things to look at. I'm not saying one is better than the other. Just different things that should be running through your head when you're looking at different types of investments right now. Is that fair to say, Craig? Would you agree with that?
Yeah, and it's one of the strategies I'm taking right now is I'm putting some into some of those bigger deals, but then I also want to do some of those smaller, you know, mobile home. You know, the perspective is in mobile home park investing, when times are good, mobile homes are needed. When times are bad, mobile homes are needed even more. So it's just one of those things that I think is I look at some of these bigger developments. Yeah, I've got some questions with how those may turn out, you know, several years down the road, but you know, I've got some there. I've got some in the one-offs and the mobile homes, as you say. So I guess it's kind of diversifying within the private money club.
Yeah, no.
Yeah,
Absolutely. And that's kind of the beautiful thing about real estate, right? Is we're able to diversify within a specific asset class, which is an interest. It's almost like what a mutual fund is kind of designed to do. You guys know what mutual funds are, right? So what your 401ks are made out of is a mutual fund, essentially. Now they call them index funds are very popular these days, but an index fund, and all an index is a group of companies within the stock market, right? So the same thing as a mutual fund, it's a group of companies. So you might have Apple in here. You might have Amazon in here. You might have Facebook or Meta or whatever it's called now in here. You might have, GM and Ford. So when you invest your money, basically it's saying, well, GM tanks, but Ford does well, and Amazon does well, but Apple does not well. Well, your money's slowly going to grow because of that diversification. Well, all we're basically doing here, what Craig is saying, is we're doing the same thing within Private Money Club. Because what we have is we have, let's say we have a total of 100 grand. Now we have 25K with Jack in new construction, right? And then we have, let's say 25K, and I'm just using random numbers here, with Levi in a quick flip. And then I have 25K with Chris Rude on a mobile home park. And then I have 25K with Andrew in commercial real estate. So now I got new construction. I got a new construction in Florida. I got a quick flip in Alabama. I got a mobile home park in Texas, and I got commercial property on the West Coast. So now I'm kind of diversifying my money in real estate, secured by hard assets, like you talked about when we first started, Craig, but it's in different types of real estate where, hey, if new construction comes to a halt and commercial real estate takes a hit, because there's lockdowns again or some bullshit like that, right? Well, affordable housing's still good because people got to live somewhere. And the quick flips, my money's coming back because it's a quick flip and the money wasn't tied up and it's on a cheaper house. So it's again affordable housing. So you're basically hedging against what could happen in the markets. And worst case, you end up not making money on it, but you get your money back. You make good money on this one, but you're still in the game and you're still living to see another day. So just different ways to look at it.
Yeah, and I think on maybe one of the things you have to be prepared for is maybe it takes longer to get your money back than you anticipated, right? So I thought I might get it back in 6 months, but due to the market, maybe I got it back in 9 months or maybe a year. And so those payments will keep coming because the person owning that property doesn't want to give you that piece of property for the lack of a couple interest payments. So more than likely, what I see is your terms may go longer if times get worse. But then if you also consider where you're funding from. So in my case, I'm funding from a policy. I don't have to pay it back at any particular time. I don't even have to pay the interest payment. So I just feel very settled, I guess, in the way these things are funded. And then I feel settled in what they're backed by. So, when I look at this whole program, it just blows me away at what we can accomplish here. So.
Yeah, no, absolutely spot on that. All right, so I'm trying to see if we have any questions. So Todd was asking, as a broker, can I lend money to another lender at Private Money Club so they get a better return and I get a larger broker fee? I don't have any clue on that, Todd. I'm not a licensed broker. I don't know what those laws would look like or what that would look like on your side. Are you familiar with that, Craig, at all?
I am not.
Yeah. I'm not sure, Todd. We'd have to look into that one. All right. Is there an affiliate link for Private Money Club? Yeah, there is, Mark. You do have to be a member of it, which I believe you are a member of Private Money Club. So if you are a member of Private Money Club and you'd like to share it with other people, we will pay you an affiliate commission. I think it's like 20 or 25% too. So at $1,000 membership fee, that's like $200 to $250, which is pretty good. Just for sharing something that'll really, really help them. Remember, we don't take a cut on anything. So it's membership based only. So every deal that you as a lender do with every borrower and every borrower with lender, that's 100% you guys. We're not taking points. We're not taking fees. We're not taking a percentage or a cut of it or anything like that. It's simply between you guys. All we do is collect the membership fee annually. So the person to contact for that is Gabby So just reach out to Gabby directly for the affiliate thing, or if you email me, Mark, I'll connect you with Gabby. All right, if you guys have any questions, put them in real fast for me. I'm going through, I think I saw a couple. Normal, okay, so Jim's asking, what's the normal time for a borrower to send paperwork to lender so they can look over before closing? I mean, what are you seeing, Craig, on that? Like, how quickly are you getting the paperwork?
So it's been a variety. The Rob Fuller deal was pretty fast in terms of when I got the paperwork and then funded the deal. I mean, that was all within a week. I had someone review the agreement and then just sent the money out. Some of the other ones, I think, like working with Levi, those may take a little bit longer because they're trying to line everything up to get the funding, get the closing set up. So some of those I've seen a couple weeks, maybe 2 to 3 weeks could be. But what I try to do is get the money staged and the bank account just ready to get wired out as soon as I'm comfortable with the note. But I've seen a variation in those.
Yeah, so that kind of goes back to what I was saying before, right? So Rob Fuller, it's a $10 million raise. They have it in tranches. He's done this for years and years and years. So their contracts, their paperwork, it's done, it's set, it is what it is. You can have people look at it, but he's probably not going to change much on it, right? So that way he's able to send it to you. It's already ready. And he's just sending the same paperwork to everybody. So he's probably has 50 investors from the private money club that's lent the money, let's just say. He sent the same paperwork to everybody, right? So now, somebody like Levi, that's, you're funding one of his deals. Each house that he's flipping right now, he said he's doing 3 to 5 at a time on his profile. Right. And each one of those deals is different paperwork. So it's not sending the same paperwork to 5 different people each month. It's new paperwork every single time based on that specific property that he has to send out to each investor every single time. So getting that together, having the title company have it prepared, having the attorney properly preparing it and having it ready, it could take a little bit longer. But at the end of the day, you as a lender, it's your money. So if you're not comfortable with it, don't do it. If you need more time, it kind of is what it is. So just keep that in mind. All right, let's just see here. To talk to Andrew. Yeah, no problem. So if structured properly, your money is paid back by the title company. Yeah, Greg. So that, really that should be, your money should be held in escrow and then it's released that way to you. So that's a good point as well. It just depends on how you guys have things set up with the investor and who it is. So let's see. David said, I funded one of Levi's deals in West Virginia. He closed on the property that week with me in the first lien position. He paid 2 months interest only the week after close. Very trustworthy. Okay, that's good. So David just giving a little shout out to Levi, who he's lent money to and is doing what he said so far. Gabby's usually on the Q&A session at 4:30 on Wednesdays. Correct, she is. I can connect you guys via email with Gabby, though. She's great if anybody wants to do the affiliate thing. So Donna's saying in sometimes different states and different contract verbiage. Yeah, absolutely. So like half the states are mortgage states, half the states are trust deed states, and that's going to affect, what the paperwork looks like. Some states run everything through escrow companies. Some of them use just in-house attorneys. So it could look a little bit different, whether it's a title company or an attorney that you're sending, wiring the money to. So yeah, each state's a little bit different. Rob Fuller's a class act. 4 days from paperwork, funds wired to first partial distributions. Absolutely, Mark. Like I was saying, Rob's got a lot of experience doing this. So he's got a team in place. They got the attorneys in place. They got the title company in place. Like it's just an automated machine at this point. And that goes into what you're paying too. You guys are lucky. Rob's paying, not lucky, but Chris did a great job kind of setting this up with Rob. And I will say Chris set this up with him. But Rob pays good money for what he's doing. Paying 12% or more on that deal is good considering the experience that Rob has and the well-oiled machine that he has in place. But that does go into play. I mean, if you're dealing with an investor that's newer, that doesn't have that experience, it's going to take more of your time, more risk. You should get rewarded for that as a lender. So that's when you say, hey, maybe I charge you some points. Maybe it's 15% instead of 12%, little things like that. And that's all negotiable. So that all goes into the deal. Let's see. Got a raising capital meeting now. Thanks, Nagy. Yeah, Todd. Awesome, Todd. Sounds good, man. We'll see you Wednesday. All right, cool. So So I think that was really good. I know we're about an hour in right now, Craig. I don't know how long you had put aside for this, but I think it was a good week. If you guys have any other questions, put them in there real fast. But it's kind of everything that I wanted to talk about this week. Where do you get the appraisal for a mortgage note? So that's a good question. So the borrower, that's kind of in the negotiations too. Is there an appraisal on the property? Are they only running comps? Who pays for that appraisal? If you as a lender, you want that appraisal no matter what, then you can dictate who does the appraisal. An appraisal by any means is not necessary, but if you're more comfortable having appraisal done, maybe you want to have input on who does that appraisal, what the appraisal company is. So that's one of those things where it just depends on your comfort level and what they've already done versus what you'd want to see as a lender. Is that fair to say, Craig? Have you done any appraisals?
I have not. I have mainly just done the, kind of looking at the comps. If it makes sense, then I don't go to the appraisal stage. I have not done that yet.
That all comes to what's called underwriting.
Mm-hmm. Yeah, there's a lot of information out there where you can look at comps in the area. You can look at what the rents are in that area. And that's a lot of what I do just to get comfortable to see if we're in the range of the numbers.
Yeah, a good resource that we use. And one of the cool things about the new Private Money Club, which by the way, I believe we've completely funded that 25 Private Money Club deal. So if you guys are in it, congrats and thanks for being part of this. But one of the things we're building into the new Private Money Club is the ability to underwrite deals right from Private Money Club. So it'll pull comps for you. So those of you that have been on our 3-day money school trainings, the 3-day money school essentials trainings, that part that Andrew does with Flipping Edge, that Flipping Edge software that we have, that's basically starting to run comps and underwriting the deals. So that's what I mean by underwriting. So you're pulling comps, you're looking at the area, you're doing your homework on it, you're, looking at all that stuff. And, maybe an appraisal is required, maybe it's not. That's up to you. But, that could be part of, hey, I'm willing to lend you the money, but I'm going to require you go pay for an appraisal. Here are 3 companies that I would feel comfortable for you using for an appraisal. You need to hire one of these companies, pay for it, and I need to be CC'd on that appraisal when it's set over. If that's what makes you feel more comfortable lending on a deal, make that part of the terms before you're willing to lend on it. Yeah, and Greg's saying, most borrowers aren't going to want appraisals. Comps are fine. And that's especially if it's an experienced borrower, they know what they're doing. They've run their comps. This is their business model. They know what they're doing. In that case, yeah, an appraisal might, probably won't be needed. But again, you as a lender, maybe you want one. Let's see. So Rob said payments were put out this weekend. That's awesome. So Kevin's asking, you only want first lien position on a note. Ideally speaking, first lien position is the safest. You have the first right to foreclose on that property and secure your money if anything goes wrong. Everybody after you is basically at your will. So if you lend in a second lien position, I would just understand what you're getting into. Who has the first lien? What would that look like if things went wrong? What's the debt to, what's the loan to value ratios? Why are you second lien? And if you are second lien and not first lien position, get rewarded for that, meaning you should be getting a higher interest. You should be getting points. You should be getting something out of that because you're taking on more risk in a second lien position. I'm not saying never lend in second lien position, because there's a lot of times where it makes a lot of sense to do so. A great example is Devin Burr. Those of you guys lending on Devin Burr deals, I think most of those are second lien position, but that's because he uses hard money. He uses hard money in first position, and then he uses private money in second position. So the bulk, let's say 100,000, let's say $800,000 is hard money, and only $800,000 is private money. But if the deal's worth 1.5 million, there's still plenty of room in there where things could go haywire, where your money could still be protected. So it just depends. You got to run the numbers and look at it, but first lien position typically is what you're looking for. All right, cool, Craig. With that being said, I mean, anything else you wanted to share? Anything else from your experience? Anything like that?
I think that's the gist of it. And if anybody does have questions for me, once my perspective, I'm happy to chat with them. So you can reach out to me on the Private Money Club, track me down on Facebook, any of those types of things. I'm happy to share.
Yeah, no, that's a great point too. And Craig, we really appreciate you. I know you hop onto a lot of the webinars and give a lot of really good feedback in the comments and, share your experience. So that's what this is all about. It's a community where we can all help each other. We can all grow and we can all make money at the end of the day. And that's what it's all about. And we do want to keep it that way. I've, Chris and I have had a lot of conversations, who do we want to let in the club? Are we going to, open it to the public? Are we going to make them go through basically an application process before we approve them? And really on the borrower side, I really only want to allow borrowers. So far, all the borrowers that have joined, like I've talked to first, make sure they have the experience, make sure they're doing things the right way. And everybody that joins signs a DocuSign. And if you read that thing, we have full rights to kick you out for any reason at all. So if we get wind that you're doing something wrong, either on the lending or borrowing side, like you're out, because we want this to be a community where we can all have fun, make money, get together, do live events, meet in person. And in between meeting in person, we have this great community online to be able to communicate and build those relationships. But at the end of the day, we are going to do more and more live events, go around to different cities, different RIAs, different groups, and bring the Private Money Club all across the country. So yeah, I really appreciate you, Craig, and people like you that are, willing to come on and just talk about your experience. It's a beautiful thing.
Yeah, well, thanks for having me. And I look forward to meeting you later this week, and everyone else is going to be in the Money Multiplier event. That's going to be awesome. So,
good times. Yep. So we'll see you guys in Daytona. If you're not in Daytona, we'll see you on the webinars later this week and see you here next
I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Click that alert button, actually smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.